We discuss the things that matter, and at the moment it's Christmas and holidays. Okay, my name is Richard Lee and I manage the stockradar.com.au website for you. We educate members on trading markets based on price action and managing controlled high conviction momentum strategy. Remember, there are systems, processes, stops, risks, biases, expectations and objectives and strategies, all things we need to be aware of to heighten our trading skills, and I'm here to help you. Okay, to the market. So many markets are being pressured without yet breaking down. So the pressure's on, we can see that, but they're holding up pretty well. So let's go straight away and have a look at, well, before we do, we'll just go through. Here's our little holiday package here. Have fun, catch a wave, no more charts, take a holiday. That's what it's all about at the moment. So enjoy the time with your family over the holidays. Okay, so today we just go through the normal overseas markets, ASX 200, Stockradar portfolio, ASX stocks, and a little brief mention on trading tactics, and there's a little brain, have a little rest there for his holidays. Okay, so first, as I say, to the markets, Dow Jones, okay, not a lot of change here. It's continuing up, and there's no real problem there at the moment. So you can see here we've had a bit of correction, we've had a good selling bout here, but the markets have held up pretty well and the buyers have come straight back in. Whether they can hold it or not, we don't know. So we're watching this S1, the low point down here, or the higher probability option is probably a break on the upside until we get more evidence that this is going to be a sell-off, because we've seen this happen before, selling waves, and the market's going to continue it on up. So it will happen, and that's the way markets work. So at this stage, the trend is still up on the Dow. Okay, Nasdaq, pretty similar. It's also still running high. We see a little bit more activity going on here, both buying and selling. We've seen the market come off a little bit. It's come back around to this trend line moving average, and the S1 area is just below a little bit further. So there's no real change in the price action. We see these things happen all the time. It's just a correction. We've got a slightly higher volume here, which is a little bit different, but for the moment, we don't need to worry too much. Okay, we'll quickly go through the commodities, because I've got lots of stocks I want to get through today. Copper, pressure, going sideways. No real change there. We can see Brent crude. It's had a lot of selling hit this market just recently. It's forced the price down, which is not a good sign. This is off a little relief rally. We'll look at BHP a bit later on. Same sort of things happening when you get a big fall like that. You get a bit of a relief rally. So that's all I'm reading into that at the moment. Sellers are having effect now. You can see the selling here, and momentum has slowed. It's still above zero, but it has slowed. So just be careful. Crude. And the other one is gold, which really is doing very little at all and has done for some time, for quite a while. So really not doing much there at all. You're probably getting in and out of your gold stocks as they go up and down, but I wouldn't worry about them for the moment. I'd steer clear of them. Okay, XJO. This is what we really want to have a look at. Let me just blow this up for you. It is doing very nicely. However, we have a nice big trend up here. Now all of a sudden we've got a slight change in the price action. We have broken the new highs, but we're seeing a bit of a sell-off here, and that was on quite high volume. If I can just show you here, I think I've got this one here. This is charting investing.com. They've got volume down here, and you can see here, this is the high of the XJO, and this is the more recent high when we broke those highs, and with a little correction pattern here. So we can see this volume here is occurring here quite a lot, and volume here. So there's a lot of volume on this downside. So that's a little bit of a change there. So we're just going to watch this S1 level fairly carefully, because we also have a lower high. So there's little bits of evidence are starting to show a bit of volume on the downside, failure to make a new high. It all says there's a little bit of trouble. So we'll just keep our eye on it. We've lost a few stock picks over the last couple of weeks as we've trimmed our positions a bit. So just keep an eye on the SJX. We don't want to see S1 go, and I think that's around about 73, 7400. Sorry, 7100, 71, 7200. Okay, so now with the XJO, we've got the SR portfolio is flat at 62 of 188 stocks covered, 167 stocks and 21 ETFs. The 5-stock portfolio has 4 stocks, the 10-stock portfolio has 9 stocks, conservative is down to 6 out of 20, and our sectors still on the top are internet and property. No change there, it's been there like that for a while. Property stocks have been doing quite nicely, we'll have a look at a couple of those a bit later on. Building our portfolio was actually doing reasonably well, considering the market slowed down over the last few months. It's up about 16.7% since March, which is a really good run. So we're lucky we've got those. We've got CPU doing pretty well. Car sales is better. WiseTech's bounced back. IPL is a bit indifferent, and Orica has dumbled a little bit. So we'll just watch that one. But this portfolio is built of compounding. Is a compounding portfolio with dividends reinvested. Okay, so that's the ASX 100, that's the commodities. Now let's look at some stocks. We'll quickly go to JB Hi-Fi. I don't think I'm going to continue on with this one next year. I'm getting a bit bored because there's not much happening here at the moment. So you can see here it's just been sideways for quite a while. Even though JB Hi-Fi still keeps pumping out good news, there is significant resistance up here at around $50 to about $52, $53. Okay, so we're getting this lower high here. The volume's starting to wane. The momentum is pretty well zero. Trend intensity rating is -6, so it's actually not too good. But it really is a fairly indifferent neutral position, so don't worry about JB Hi-Fi too much. The ASX, we took a new high on this one just recently. It broke the new high, broke out of a beautiful 3-year trading range, and that's a high probability entry. And so we hang on to that for the moment. It has come and taken a big bout of selling over the last couple of weeks, but it has bounced back. So we're pretty happy with that one for the moment. We just demand stays strong. Trend intensity rating is 8 for the ASX, so hang on to that one, and you can see momentum here is also very high. Okay, now back to national storage, which has been a real creeper. Slowly but surely, we had a trend reversal back here in November of last year. So we're about a year into this trend now, and it's been moving up and up and up ever since. It's now made a new high. So the weight of evidence is compelling here because we've got the moving average, the price is up, the volume is down, so sometimes that can happen. Shortage of stock, hard to get a hold of it, and momentum is very strong and very high on the scale. So trend reversals, new highs, above the averages, momentum good, all looks good for national storage. Simply raise your stop on that one and hang on to it because it'll be your best friend because it's a trend. Okay, now the banks, we've got five major banks, and 2 of them are holding up pretty well, which is NAB, which is this one here, and ANZ, which is just holding above its stop. But NAB's doing pretty well considering it's been the dog for quite a while, but we've now got CBA coming off. Westpac had a really bad time. Bendigo Bank and Bank of Queensland are also having a very bad time. So we're seeing that those banks and we're seeing that some of those big miners have come off and they're putting pressure on the index, and it's clear to see what's going on. So you can still got your little stocks, your national storage and things like that are going on quite nicely. But we'll watch National Bank carefully. It is at a bit of a key high here for about 2 years. So we'll just watch that one at the moment, but it is pretty good demand. Trend intensity rating is still +8, unlike the other banks apart from ANZ. So NAB takes the mantle there. Finally, BHP, I just thought we'd have a quick look at this. We've seen the unwinding of the dual listing, which caused a big drop here to narrow the spread between the 2 prices. And now we're just getting a bit of a rally here. The cavalry has arrived down here at this support level. We've seen some heavy volume on the downside. We've seen some good volume both sides. But we're just seeing a bit of a relief here. It's still not above the average. Momentum is just saying that the downside pressures might be going out, but it's not giving us anything on the upside there at the moment. So for BHP, to me, that's a trend intensity rating of -7. I stand aside and wait for the probabilities to be in my favour before I trade this one, okay? So that's that one. Now we'll have a look at Woolworths, which was, it had a bit of a bad day yesterday. All of a sudden people are scared because all of a sudden it's going to run out of product. I've seen these stocks before, Woolworths and Coles, Metcash. Every time they get a bit of a whack, the buyers are usually there waiting for it, and up they go again. So if we have a look at the long-term picture of Woolworths, we can see what we've been doing for the last 5 or 6 years. It's been going up until 2 years ago. We got to this high point up around $43, and it's struggled since then. And again, it's struggled again, double top of resistance. And now we're getting some lower highs here, and we had a bit of a crunch down yesterday. So now we turn to the downside and have a look at here. So we've got all these lows here in this S1 band, it's in this S1 rectangle. So that's about 34 up to about 36.50. So that's what we don't want to see break. You get a trend line coming through here. The moving average has gone flat. The MACD, momentum index, has gone flat, just turning a little bit negative at the moment. And we can see here from the volume, but there has been a bit of selling here. Nothing too significant, a bit of buying back here, but in a general scheme of things, this has now got a trend intensity rating of -3. We've been out of Woolworths for a while, as it's the trend hasn't been our friend on that one, so we've been negative on that one. So that's Woolworths. And if we also go and have a look at Coles, Coles is also an interesting picture. We've got this great uptrend since listing. It's held well, but it's also a bit like Woolworths. It's had this big resistance level up here. Now, that is a key area for Coles. Now, I like this creeping demand for Coles, these high lows, high lows, high lows. Volume is not easy to read, or just clip that one up a little bit. so we can see what's going on there a bit more, but it doesn't really tell us an awful lot. There's some buying there, there's some selling there. The momentum index is in positive territory, the moving average is flat, maybe touch up, but really what I'm looking for is this level up here at R1, which is up around $19. That's the area we would look. If this demand can blow the top off this, then we're going to see a good rally. And I've no real reason to think that they won't, because consumer staples are very important, especially now to us. And so Coles and Woolworths, I think, will be okay. But we'll just wait and see how they test. We've got a bit of a test here at S1 for Coles. It had a bit of a knockdown yesterday. It came back. So we'll see how Woolworths responds after that little scare. Probably in positive, I would think. Okay, CSR also made a new high recently, which we took the new high, and it's sort of stopped. So we had a nice little trend there from the end of 20 through to the start of 21, which is a very good move there. And we've got stopped out here, and now so it can go down, sideways or up. It's gone sideways pretty well, and it's now gone up. So now we have another shot at this one. Now we have another shot at this one here with a new high. Okay, we always take a new high, and it's come back a bit, still holding above the stop, holding above the average. There's a bit of selling going on here. This is just in positive territory, so it's not a real say yeah go, but it's a new high. It's yet to yield any gains. Be patient and watch your stop until it breaks down. You need to hold these positions. So that's what the trade plan says, and that's what we do. Okay, so just have to watch CSR and see how it survives. Okay, now another stock I haven't looked at for quite a while is Fisher & Paykel, and this makes for very interesting reading, or not really, because it's actually going sideways. And my story is, when this one is going sideways and sideways, because since the middle of 2020, it's hit a high of about $35, $34.45, and down here we've got a low at around 25. And it's just been trading between this range, and now we're starting to get converging boundaries as the buyers think they're right and the sellers think they're right. So something's got to crack soon, which is a good thing, I guess. So we're seeing the volume start to decline. You can see the moving average declining. Momentum's on zero, which is exactly what we would expect for a stock that's gone sideways for so long. So it's got a trading range there, and if I just squeeze this up here a little bit, sellers control this zone up here and buyers control this zone up here, and in the middle people are battling it out. I don't want to play in that sort of game, so I just wait until the sellers or the buyers get on top, and hopefully it'll be the buyers, and if it does, it'll push it through. It's a health stock, so we're hoping this will do okay. So that's Fisher & Paykel for those that are interested in it. Trend intensity rating is 0. Okay, a very flat consolidation through here for quite some time. We did have a pretty good uptrend there for a while, so it's all there. It's just this consolidation pattern which is happening at the moment that's stalling it, so we just have to wait until we get some action there. Okay, I just thought I'd go through a couple of little ones that this one I don't even cover anymore. It's been such a bad case. But some of these stocks, these high flyers, you've got to be careful when they get a bit of valuation into them. Sorry, they get a bit of price growth and they get overvalued, then they can be ripe for big adjustments. So that's why I trade momentum. Once momentum's gone, I get out of the stock and let it do what it's going to do. And in this instance, Nearmap, trend intensity rating is -10. Why? Because the trend is down, lower lows, lower highs. It's got a huge amount of volume just in this last kick down here. Momentum's dangling perilously. It's a very clear and simple picture. It's going down. We could probably look at it when it gets down to S1 to see some signs of support, but until that happens, really it looks like S1, $1 is probably the target for Nearmap, having been a $4 stock in 2019. Okay, so that's Nearmap. Okay, the other one I want to look at is NextDC. NextDC has been an interesting stock. We all love these stocks because they excite us quite a lot. So let's just get this in the right shape. Okay, so we had a beautiful trend up during 2020, which went from $6 to $14, whack, and it's then come back to about 10, found support, rode to a new high, failed again. It's now come back a new higher low, which is a good sign. We like to see that sort of sign. And if the buyers come in early, they haven't really lifted it off too much yet, but you know it is in a corrective stage. The trend intensity rating is +1, so we have the beauty of standing back and watching these stocks because they chop around. And certainly NextDC has a great pedigree. It looks like it's got a really good business. It's just correcting after a huge run. So we'll just have to wait and see what's going to happen. But if it does break the highs, it may well be offered another run. We have to wait and see. Okay, but for the moment you can see the momentum's negative. Volume's not really doing much. and we're flat on just below a flat moving average, and trend intensity rating is -1. So our signal is a break above here. Okay, so that's the next DC and near map. The other one, an interesting one, which is Prometheus, excuse me, which I do cover. It's just below this. We've had quite a few trending phases in this one, but the current trend I want to look at is just a new high that we took just above about 47.80 not long ago. Created a new high. We've got some good volume. We've got momentum, which was positive. It then ran on higher. Now all of a sudden we've got a bit of trouble up here at $65, $66. The selling hit this stock, and you can see here quite a bit of heavy selling drove this stock down, but the buyers have held it again, not in any great volume, but they've pushed it up again, and again we've got one of these lower high things, which I don't really like much for at all, because they usually proceed further forward, especially if S1 is going to collapse. Again, it's been a great little business. It's growing, expanding. It's probably got a little bit too overvalued, but it's finding a bit of selling at the moment. So for the moment, we're still in this one. We'll wait for our stop to go off before we get out of it. But for the moment, we hang on until our trade plan. I can look at all this stuff and say yes, 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 but maximum the trade plan rules are what really matters, and it's my stop loss that really counts. So I am wary on this one, but we haven't given up hope just yet. So that's Prometheus. Okay, now a couple of new ones, interesting ones, and we're all talking about, excuse me, we're all talking about metals. Clank, have you heard of Clank? It's the new acronym. Copper, lithium, aluminium, nickel, cobalt. An exciting year ahead for the metals. So again, the metal stocks can be just as dangerous as a lot of these highly valued tech stocks. They can correct. They can also go up fast and they can come down fast. So we just got to be careful in these stocks because they can move around quite well. But for the moment, these two stocks I'm going to look at now look quite good. Pilbara has just kicked off a new high up here, which we've taken. We've got some good volume through here. The momentum is very strong. So we just raise our stop on this one. It's broken to new highs. Again, these stocks can take you anywhere pretty well, and they can take you anywhere down as well. So you've got to be careful, watch your stop, and make sure you listen to it because it's important. So that's an interesting stock, Pilbara Minerals. We just started covering it not long ago, but it's already broken into the 100, I think, already, as we've seen this rise from 50 cents up to around 250 in about a year or so. So that's pretty good. Trend intensity rating is 10 for our Clank stock, Pilbara Minerals. The other one I want to look at hasn't broken yet, but it's an interesting one. I was on Spotty TV the other day with Elio, and we looked at this stock, and it actually looks quite interesting. There was a couple of readers inquiring about this one, but Nickel Mines has had a good run up for a couple of years here, for 2020 into early 21. Then it hit a high, okay, and it's come back, found support at S1, and we've got a bit of a bump around here, almost really a trend reversal here, but it was a bit too close to the high for me to take that. But we did suggest attack on the highs, which is what's happened, and now we're looking for the next one, which is it going to break above 142, 143? Succeed or fail, we don't know. Fail back to here, succeed, and maybe another good rally here. So we've got plenty of volume here, which looks pretty good, plenty of green bars on the upside. Momentum's very good, so if this breaks through, all it needs is a breakthrough to give us probably a trend intensity rating of 9 or 10. So Nickel Mines is certainly one worth watching. Okay, so that's what I've got for the charts today. There's lots of stuff there. It's my final week this week for the year. I'll be back in 2022. Just want to give you a bit of meat in the sandwich there. Just trading tactics this week is no biggie. It's really about giving your brain a break. Okay, look, we've had a really tough year, whether it's been the markets, especially the last few months. The markets have been tough. The pandemic, looking after kids, all sorts of things have been difficult for us this year. So give your brain a break. It's been a tough year. We could all use some time out. Kids need some fun, and I'm off until next year because I need a break too, and I'm going to enjoy that. Enjoy the break with my kids. So time to switch off. Okay. So thanks for having me, everybody. 2022. It's been an interesting year, but I'll be back next year with all my words of wisdom in my YouTube video. So just to finish off, the YouTube and newsletter portfolios back in 2020. The portfolio services back in 2022. I'm taking a break. Trend intensity and stock pick report will be updated throughout, so you can keep an eye on any positions and stops. So just the skeleton of the trading centre will be running. I urge you all to take a free trial for those that haven't. We have a little special Christmas coming up, which I'm going to announce in the next couple of days for those who are interested. So to finish off, it is the festive season, so it's time to take a break and spend time with friends and family. Take the opportunity to take a step back and review how you went in 2021, where were those mistakes, and how are you going to improve your trading skills and application next year to try and improve your returns. Don't try and do everything, just try and do a little bit by bit to get it better. I'm always here to help you if you need me for subscribers. Remember, there are only a few things you need to get right. Talking about important things, which I'm talking about Christmas and family. Also, as far as trading goes, you must know why you buy. That's your system. Why you buy, and you'll know what to buy. Okay, so have that method in place that tells you yes or no. Know your risk management strategy inside out, because that's going to keep you safe. The disciplined implementation of your trade plan. Why have you got a trade plan? To follow. So just follow it. Makes your life easier, okay? And then keep your expectations in check. We are all emotional people. We all think it's going to fall out when the market drops, and the market's going to go through the roof when it starts to go up. It doesn't always happen that way. So keep your expectations of what you can achieve in check. And remember, cool heads make cool decisions, so don't panic. It never helps. And my t-shirt this week is "The price never lies. The price doesn't lie. It is always right." Okay, so just remember that. So good luck for the trading week. Thanks for listening. I hope you all learned something today and all through the year from me. And I look forward to seeing you all next week. So Merry Christmas and good luck for the new year. And I'll be back then. Thanks.